The crypto market in Asia has dominated the West in this last cycle. I recently went to Singapore, where I spoke at the Blockchain Pioneers Summit and had the chance to interview TEMCO, a leading Korean blockchain company, and Jason Fang, an investor at Sora Ventures. Let's learn what's happening in Asia. Korea has been one of the most important markets in crypto over the last 2 years. Why do you think that is?
So Korea is a mecca of the crypto. The reason is because there's a lot of retail investors. So there's a problem in Korea where a lot of people have enough money to invest, but they're not getting the returns in the traditional investment like stocks. What happened is that a lot of normal people, they know about crypto and they invest in crypto, and it made it easier to invest in crypto by accepting fiat in exchanges. So that kind of reduced a lot of barriers to entry. And even the South Korean government knows that because a lot of people are interested in blockchain and crypto, they're trying to set up regulations that's favorable to blockchain projects and exchanges. And there's obviously a big government policy going on in Jeju Island where they want to be more like Singapore, so that a lot of blockchain companies will be based in South Korea.
Yeah, that I've definitely noticed a lot of retail activity. But one shift that I'm hearing about during this conference has been that retail in Korea has slowed down and funds are really starting to replace them in a big way.
So now that a lot of the new projects coming out, new startups coming out, they're so focused on blockchain, and traditionally a lot of the venture capital, they would invest in startups. But because startups know that they can raise money through crypto, they would bypass a lot of the traditional investors like private equity. So they feel like they're missing out on something. So recently, it's very interesting, very big news is that the number one private equity firm in South Korea called Korean Investment Partners, they decided to get into crypto and invested in the first blockchain project.
Which was you guys.
Which is us, yes. So that was a big news.
And just for those of you who don't know, it's this is what, a $2 billion venture capital fund in Korea?
Yes. So they invested in companies like Kakao, Naver, and Didi in China. A lot of big name investment before, and they're now
names that if you've never been to Asia before, this is like Uber, Airbnb, the biggest names.
Yes, like the Telegram, everyone uses Kakao, like it's WhatsApp in South Korea, they do everything through Kakao. Didi is obviously Uber in China. So a lot of the big names in Asian companies, they invested in.
And you guys have really been traveling all over Asia, the world really. What are the differences you see between some of the major markets in Asia?
So Singapore, for example, we feel like there's a lot more investors, knowledgeable investors in crypto, more than retail investors. China, we see a lot of private equity now coming into the crypto world where they're doing a kind of like a joint equity and crypto investments. But obviously everyone knows that.
And what do those deals look like?
They usually provide the equity deal with some kind of option so that they convert the equity to the tokens. There is a new way to invest in the crypto for the private equity with the traditional VC side. They also wanted to invest in the crypto to make a new investment, but they also wanted to stock in the traditional VC side. So just wanted to combination with the equity with some kind of option to turn into the crypto token.
So if a company is doing a $15 million ICO, and how much equity are they giving up for that to start?
Normally they wanted to get less than 20%.
So pretty favorable valuations, it sounds like. So it does sound like this type of structure is really catching on. And then I think it bridges one of the big problems that we've had in crypto over the last year, which is that ICO investors are very short-term investors.
Right.
And the positive about ICOs is that you can incentivize people and get great people on board, great advisors. You can get, we've seen projects get major influencers on board, which helps build notoriety of what they're doing.
Yes.
But these people tend to fall out very fast. And once the ICO is done, most of them fall out with the company completely. So they're on to the next thing. So I think that equity part has been really missing, because equity tends to create much longer term relationships between investors and the team.
And plus, I think what's happening is that a lot of people did ICOs with ideas, and with the equity deal now, crypto blockchain project move into the space where you have to have a good business model. Like you have to have how to generate revenue. How are you going to do profits? Your business partner. So it's a lot more legitimate projects are out there. A lot more due diligence is going on, and by having private equity or traditional investors in the space, not only just increases the market, but it also brings in their due diligence processes and their how they evaluate project in the traditional sense. And once you pass those, then you get the investment so that people can get security on the blockchain projects.
One thing I've really learned about society, and this isn't new, this has happened for thousands of years, is there are certain private events that happen where very influential people meet and make major decisions that have big impacts. When you really think about this and the role that government inevitably plays in business, the relationships that you have between government, between corporations, and if you're a startup, if you can get people involved who have serious relationships with whether big companies, government, whatever makes your company stand out and have like a kind of a competitive advantage in a certain way, that I'm finding is incredibly important.
When we started the TEMCO, we've been actually researching manually. We've been actually search all the newspapers if there are any good opportunities that we can be partners with. But we start with some local government area called 경기도청, and they were actually seeking for some blockchain project they wanted to build up with the government. So we ended up being an advisor with the government area. We started with the advisory role with them, and then from them we could have extend a little more about some more influence of people, so that's why we ended up meeting all those big venture capitals and Hyundai and all the other people gathered together. I think that's how we did it, to meeting influential people.
Well, what's cool about TEMCO is you guys are one of the top projects that are happening in the blockchain space there. And even though people who are part of startups often tend to feel like they're small, large corporations actually really want to get to know startups because they're afraid that they might get overtaken or not keep up with the time. So it's very interesting how you guys have been able to leverage those relationships that you've been able to quickly build.
So big companies also have problems, like Hyundai Car, one of the subsidiaries of Hyundai Car is Hyundai Mobis. They build all the car parts for Hyundai, and there are a lot of fake ones out there from China.
Oh, really?
So they have a lot.
And do they make their way into actual cars?
Yeah, they make a fake one.
Yeah, there's a lot of supply chain problems even for big companies in South Korea.
Wow,
and
that's
they are
incredible.
looking into this space. Yeah.
After my meeting with TEMCO, I next met with Jason Fang from Sora Ventures. Jason's a notable blockchain investor with ties to some of the most influential families in Asia. Before starting his own fund with David Roebuck, he was at another notable firm, Fenbushi Capital. While meeting with him, I was particularly interested in getting an investor's perspective on the Asian market and where he thinks it's heading from here.
How would you describe the investment environment right now in Asia? Because it's I view it to be pretty dead in the US and Europe.
It's most funds in Asia, just to give people a brief background, they're more like hedge funds, and most of their money is coming from the money they made from last year. So it's mostly their own money, which means that these investors are more or less practical investors who are really here to make money from the token from token investments. At this point, I would probably say most of them are either stop investing or just investing less, because our investment strategy has always been long term. We focus on more incubating, more hands-on. We're still actively investing on about 2 deals per month, and it's been like that since day one.
Mm-hmm.
Yeah. So regardless of a bullish market or a bearish market, our investment has always been 2 or 3.
And when you guys are looking at a project, what are you looking for that stands out to you?
Well, 2 things. In the US, for example, we invest more on scalability and protocol. In Asia, we actually like to incubate ourselves, and usually we do 1 project every 6 months.
How would you say that the projects you're doing now differ from what you were doing at Finbushi?
To be honest, I think number 1, we have shifted in terms of the industry we're investing in. So for example, in 2016, when I was at Finbushi, a lot of the investments we did was actually more in the financial services, right? And I think those who actually looked at blockchain all believe that, this is going to be the next big thing because large banks are using it. Of course, R3 has over 100 banks on board on their consortium. So it was really a rush to investing into these companies that had these great connections with banks, right? And then of course we had healthcare, we had supply chain, all that. But what we realized is, in the end, is a lot of these companies had to pivot, or they had to, the most they got to was a POC, a proof of concept. And the reason for that is because although they understood the technology really well, it was very hard for them to deliver a practical approach because they didn't understand enough of the industry.
Well, and a lot of them were first-time entrepreneurs who weren't from the industry that they're actually targeting.
Yeah, and of course, at that time, a lot of these industry leaders, a lot of these banks or large companies that want to use blockchain, they just started learning about blockchain, and so they're more relatively conservative, and to push something as new as blockchain in 2016 was very difficult.
Yeah.
And so our investment approach now is our investment is more on the entertainment, gaming industry, and these are the areas that we think are probably more suitable. I think one of the things that was unique about this space is there's always innovation, and there's basically the sky's the limit. You can always think of new ways to tokenize. You can think of new ideas to tokenize.
It seems like Korea is probably the strongest market from what I can tell, followed by China.
Yeah, so China, okay, so the thing with this is China is still probably one of the largest market, the market that has the most influence on the crypto market after the US. And the reason for that is because a lot of these large exchanges are run by Chinese entrepreneurs. A lot of these secondary market players are all Chinese. And these people have, the influence to change the market, moving up and going down. Like government banning Chinese ICO is, I think, the first step towards perhaps regulating the environment. But that didn't stop people from doing private sales. People are still doing private sales today. In fact,
And are they doing that within China, or does that happen in places like Singapore?
well, the entity is offshore, but they're still fundraising in Chinese soil, and obviously that could be quite sensitive, right? But we've seen an increase of fundraising even after the ban in China. And of course, exchanges basically just move their server outside. And there are still strategies for exchanges that enable a lot of U.S. Chinese citizens to trade on the exchanges. And I think it's just a matter of time when we see a more formal guide or framework for Chinese government to kind of step in and see how they can regulate this environment.
So for companies out there that are trying to raise capital in China,
Yeah.
what is your advice on how they do that?
Well, number one is definitely make sure you do thorough KYC, AML. That's incredibly important. Make sure they're accredited investors. Make sure the money does not come within from China. So even if it's a Chinese entity, make sure that the money is outside of China.
And why is that?
Money laundering. Yeah. I guess the biggest hurdle at this point is the government understands that there's cryptocurrency is becoming more of a primary focus for a lot of these people who want to do money laundering, and even today it still is. Right. So from a project perspective, if you can avoid that or at least make the argument that you've done thorough KYC and this money is actually not from China, then it reduces your risk significantly.
This space changes every 6 months. Where do you see this space evolving over the next year or two?
I definitely think there's going to be a lot more regulations, right? And these are actually good things for our ecosystem. These are improvement in our ecosystem. STO, for example, they're probably going to be more popular. Tokenizing on IPs, tokenizing on real estate. We've even seen a lot of real estate deals recently. Yeah. So a lot of I think what we're starting to slowly see is tokenizing on things that actually could be compliant to the local jurisdiction. Well,
so it sounds like security tokens.
Yeah, I think a security will be huge next year, and then
even in China.
Not in China. I think China will be very difficult. I mean, even now there's a lot of companies that claim that there's these certain Chinese companies are investing into our token project. Realistically, I think either they're going through equity, and then some form of promise, whether it's to a SPV or something offshore that enables the company or a managing partner of the company to obtain the token, but it wouldn't be directly.
What's one of the biggest learning lessons you've had in the industry so far?
The biggest lesson I'll probably say is initially when I was at Fenbushi, we always invested in things that was popular in the space. But nowadays, we like to say that we're investing on things that I think is more practical and that's things that we see ourselves as being value add in the future. So we're less of followers, but the truth is, if you don't have such a large stake in these deals, it's hard for you to make money, right? If most likely that 99% of all the investments will eventually fail, right? So the idea is how do you how do you differentiate yourself and how do you invest in things that are actually sustainable? And I think in order to do that, you have to really understand your go-to-market. You have to really understand these entrepreneurs, how flexible they're willing to work with you, level of trust, right? And these are things that you probably won't be able to do if you're just following around.
Crypto is serious business in Asia, and there's major capital investing. If you're interested in expanding your capital raise to Asia, reach out to us at Influential Capital for advice. And if you haven't looked at STOs yet, take a look because they're a big opportunity in crypto. Like this video and let me know your thoughts on the Asian crypto market in the comments. See you next time.